chairing the session, and student speaker Mr. Shantan M. I request Mr. Justin to escort the speakers onto the dais. I invite Mr. Hari Krishnan, member Sikasa, to introduce our speakers for the session.
Welcome back everyone. For the next session, we are honored to have with us CA R. Bhupati, past President ICAI. He is a recipient of the Paramacharya Award and Certification Award given by the Confederation of Asia Pacific Accountants for the contribution made to the chartered accountancy profession. He was a member of various committees constituted by the Government of India and the regulators, SEBI, RBI and the Department of Company Affairs. Mr. R. Bhupati was a member of the International Accounting Education Standard Board for a 2-year term and represented India in many international forums. He was a visiting faculty in professional institutes and business schools. He also writes articles for the business magazines and newspapers. Welcome, sir. Mr. Shantan M., a CA final student working as an audit trainee under Messrs. Suresh and Balaji, Chennai. He has delivered presentations in various seminars on multifarious subjects. He has been awarded the Best Speaker and won prizes for elocution competitions held at various forums. We welcome you. Sir, you may kindly take over the session.
Mr. Shantan from Bangalore, Mr. Sajib, the chairman of Sikasa, office bearers of Ernakulam branch, and my dear students. It's a very important and interesting event. 2 days CA Students National Convention. And this idea is mooted to unearth the talent of students to come and make a presentation. It was Francis Bacon who said that reading makes a man perfect, writing makes him exact, and conference makes him ready. I am sure Shantan is now ready because he cannot now postpone it any further and he has to make a presentation. I am very much impressed by the topic which he has selected, which even chartered accountants in practice will hesitate to take. So I should compliment Shantan for his courage to take a topic like international taxation and present it to a student's audience. And I just glanced through his paper, right from the basics to the latest decisions he has referred to in his paper, which is a good reading material, and it adds value to all of you for participating in this seminar, in this conference. What I would do is, the session is from 10:30 to 11:45. I would now request Mr. Shantan to make his presentation on international taxation, and thereafter, if there are any supplementary points on that topic, I will give, and after that, some salient aspects of the Direct Tax Code Bill 2010, which is in the offing. With this little bit of preliminary observations, I would now request Shantan to make his presentation on international taxation, and I would request each one of you to give him a very big round of applause as a gesture for his courage and conviction.
Thank you for the warm welcome. Respected sir, people of the dais, and all my friends, high spirit morning to one and all. How do you like to have a hot cup of coffee as soon as you're up from the bed? How do you like to have a chilling drink after running around sun? To that extent, we professionals should possess the quest towards knowledge to move ahead. With this high note, I would like to move ahead. A couple of days back, I happened to meet a cute little kid. As soon as I saw it, I was not able to stop myself but told, wow, so sweet. A girl next to me popped up and said, wow, so sweet. Expression differs, my friends, but meaning is the same. So is my presentation over here today. 24 July 1991, liberalization was born in India. Now after 20 years, India has come of age and still going strong. We were using LML Vespa or a Bajaj scooter. Now we won Yamaha R1. We had a status with Ambassador or Maruti 800. Now we won Audi. We were using traditional train ringtones, but now all digital. India has changed. India got liberalized. There was a day when US was drowned with several Great Depression and financial crisis, but we were hardly affected by it. And today, thousands of miles away, Lehman Brothers filed a petition of bankruptcy, and we are in soup. The real heat of international taxation was started to be felt post-1991, that is after globalization was coined. After that, the whole globe was considered as one single market. We were started to be interconnected. So basically, what is international taxation? International taxation pertains to a branch of knowledge which is related to international tax laws and international tax treaties, with the objective of equalization in tax rate and economic development. But there are few conflicts which always arises. Before I start my presentation, let me ask how many of you are doing articles and non-articles. Based on that I can go with. So how many of you are doing articles over here? Good. Non-articles? Thank you. Like as we all know in PCC or even when you are doing in training session, we all know a person can be a citizen of one country, but he can be a resident of more than one. In such situation, the problem arises of double taxation of a same subject. 2. Taxable event. There arises a problem when you make a payment for royalty or fee for technical services, either on whether you are having a problem whether it's on payment or source basis. 3. Different tax base, whether it's in global scenario or territorial. These are the few conflicts which I am going to explain. So basically, what is double taxation? Can you just identify the picture in that? Can you say who's that? Great. When you see the diamond-studded jacket and glow, I guess you can recognize it's Michael Jackson. Now let me take an example of him. Assume he comes to India for a rock show. Meanwhile, he signs some advertisement contracts and he earns out of it. Now his tax has to be deducted. But the problem is he's a citizen of different country and his global income is taxable in his country. In such scenario, what are we going to do? Are we taxing in India as well as in his country? Or what is the problem? Or what can be solved out of it? This is double taxation. Taxing once in home country and once in host country, and that's called double taxation. So to avoid such problems, double taxation avoidance agreements, in general treaties, have come up. Let me see few tax models. First one, OECD model, Organization for Economic Cooperation and Development. Way back in 1948, American and Canadian countries had followed OECD models. In the year 61, it was extended to European countries too. OECD model in general is a treaty which is having in between developed countries, and it follows a tax system where it can tax a person based on the residential status and not source of income. UN model, United Nations model. This is a treaty which is formed between a developed and underdeveloping or a developing country or two developing countries. India is following UN model because we are a developing country. Here we are taxed based on the source of income and not on residential status. US model, as we all know, US will come up with its own acts, and US model is a model where you have a treaty or negotiation with US. Methods of avoiding double taxation. Assume tomorrow you go for a doc, he diagnoses that you have viral. Instead of saying what medication is to be taken, assume he comes and congratulations, you got viral, please pay the bill. So is the situation over here. When you recognize that there is a problem of double taxation, if we don't solve it, it's not fair. So there are methods for avoiding double taxation. First one, unilateral relief. Now my question is different. I'm not going to ask who's this, because you all know who's this and whom she married to. But my question is from the tax perspective. Now whether she is resident of India or Pakistan. India? Pakistan? India. Good. Well, let's assume it as India. Now in unilateral relief, we have a tax credit method, or a tax credit method is followed in fact. If we don't have a double taxation avoidance agreement with a country, unilateral relief can be taken. That is, a tax credit method system can be considered. Now assume Sanya will go to Singapore, and we assume we have a treaty with Singapore. We don't have a treaty with Singapore. She earns, or she wins a cup, and she also earns a $1 lakh check as a cash prize. Her tax is payable in that particular country. Assume her taxation is for $10,000. But if she would have won in India, it would have been $15,000. In such situation, the balance $5,000 is to be paid and not paying again $15,000 because you already paid. So this is one of a type where you can solve double taxation problem. Now assume in situation 2, she pays $15,000 there and she was supposed to pay $15,000 over here. In such situation, no need to pay. Now assume she paid $20,000 over there and $15,000 over here. She'll get a refund. Is that so? I'm sorry for that. It's not so. Income tax officer will come and say, thank you, you can move ahead. Bilateral relief. Roger Federer belongs to Swiss and she belongs to India. Now assume we don't have a DTA between them, or generally bilateral agreements means every double taxation avoidance agreement is a bilateral agreement. In general, any agreement will be called as bilateral agreement. Now we have an agreement between Switzerland and India saying any income or any winnings out of sports shall not be taxed. In such situation, either of them go to either of the countries and wins, it's not taxable. Multilateral relief. Now I guess you will explain me better than what I know. Simple. Any bilateral relief with more than 2 countries is multilateral relief. So now comes the question, what if there's no DTAA? Either you can go with unilateral relief, and also there is one other option, you'll get a refund on excess amount paid over there, provided the taxation aspect is lower over there. Or you can have one more option, if the tax is equal in the foreign country as well as in India, in such situation, Indian tax laws will be applicable to us. Abuse of double taxation avoidance agreement. We know that double taxation avoidance agreement is there with the object that we shouldn't tax a person twice. But we also should know one more thing, it doesn't mean that we shouldn't pay tax at all. Let me give an anecdote. There was a person, okay, before that, let me go directly with the transfer pricing situation. Basically, what's transfer pricing? Transfer pricing is a price which is transferred, or which is a price which is charged for the transfer of goods, services or know-how, etc. for a related company. Basically, they transact with a related company because to gain a synergy effect with the company and not with the outsiders. Let me illustrate you for example. Assume Microsoft floats a subsidiary in India and it exports a software to India and charges $10,000. If it charges same $10,000 to a competitor or an outsider party, it is fair enough. If it charges, or if it overcharges or underprices, it will have a direct impact on taxation. That is where transfer pricing comes into picture, and hence transfer pricing study is made to say that we shouldn't charge more, and that's the reason we have to prove ourselves to the TPO saying we are not charging more and it's in line with the industry. 2. Treaty shopping. Treaties are misused by many countries and they are taking the advantage by investing in low tax countries. How is it possible? It is possible because we have one live example, Indo-Mauritius Treaty. We have a treaty with Mauritius, that is way back in 1983 we had a double taxation avoidance convention. We all know when shares are transferred in India, we have capital gain tax based on the income. But based on the double taxation avoidance convention with Mauritius, it has been concluded that when a company is incorporated in Mauritius and when the shares are transferred, the gain is not taxed as capital gain tax. Probably it was done with the right motive, but now the scenario is different. Many countries go and incorporate in Mauritius company, deals with Indian shares without paying tax. It's a very critical situation because India is losing a very huge chunk of amount through this way. Case went to Supreme Court. That is Union of India versus Azadi Bachao Andolan. It was 263 ITR 706. It was a landmark judgment. Supreme Court held that a circular issued from CBDT shall prevail, though it's inconsistent with IT Act, provided it is in line with the orders, rules, regulations, and hence CBDT circular shall prevail and it's not considered as ultra-virus